Let's start with a simple truth. Most people were never taught the rules of money, not by schools, not by parents, not by employers. Yet money rules your decisions every single day, whether you're broke or building wealth. So today, we're pulling back the curtain on the unspoken financial formulas that quietly guide smart investors, entrepreneurs, and financially free people. We're going rule by rule, and not just telling you what they are, but how to use them. Because if you want to get rich, or at least stop being broke, you need a cheat code. And this is it. Let's jump in. We begin with one of the most powerful money rules of all. When you understand this rule, you stop wasting time. It's called the rule of 72. Here's how it works. 72 divided by your annual return equals the number of years it takes your money to double. Let's say you invest in something that earns you 10% a year. 72 divided by 10 equals 7.2. So in 7 years, your money doubles. In 14, it doubles again. That means $25,000 becomes $100,000 in less than 15 years, without adding a single extra dollar. But here's the kicker. If you earn just 2% in a savings account, your money takes 36 years to double. This rule reveals the cost of low returns. If you're sitting in cash too long, inflation eats you alive. If you're not investing, you're moving backward. Understand this rule and you start choosing investments, not savings accounts, to build your future. Now let's zoom out and ask a different question. How much should you actually be earning? The rule of 2000 gives you a rough way to calculate your annual income from your hourly rate. Take your hourly wage, multiply it by 2000, and that's your yearly salary. So if you're making $25 an hour, that's $50,000 a year. It's not perfect, but it gives you a quick gut check on whether a raise, a promotion, or a new job really moves the needle. And here's where this rule becomes powerful. When you reverse engineer the life you want, you can figure out what hourly rate gets you there. Want to earn 6 figures? You'll need at least $50 an hour. Use this rule to set targets, negotiate offers, and calculate side hustle income. Because if you don't know what your time is worth, someone else will decide for you, and it'll be less. Now let's pivot to the big one. How much money do you need to retire? The rule of 25 times is your shortcut. Take your annual spending and multiply it by 25. That's roughly how much you need to reach financial independence. Spend $60,000 a year, you'll need $1.5 million. This rule assumes you withdraw about 4% annually from your portfolio without running out of money. It's simple, it's powerful, and it makes retirement feel a lot more tangible. Want to lower your number? Spend less? Want to retire faster? Earn more and invest the gap. The 25 times rule turns a fuzzy dream into a math problem, and once it's math, you can solve it. And that brings us to the next truth bomb. How much house can you really afford? The rule of 3 times income is your new sanity check. You shouldn't buy a home worth more than 3 times your annual income. Make $100,000? Look for something around $300,000. This isn't what your mortgage broker will tell you. They'll approve you for more. But that's not the same as being able to afford it. This rule protects your cash flow. It lets you save, invest, and breathe, instead of living paycheck to paycheck in a house you can't enjoy because you're always working to pay for it. Real wealth isn't just about what you own. It's about how much freedom you have. Let's switch gears to a financial trap almost everyone falls into. How to buy a car without wrecking your finances. Enter the rule of 20-40-10. When buying a car, here's the max guideline. 20% down 4-year loan term or less. No more than 10% of your gross income toward monthly payments. Let's break that down. If you're buying a $20,000 car, you should put $4,000 down and finance the rest over no more than 4 years. Your monthly payment should be under 10% of your gross income. So if you make $5,000 a month, you can only spend $500 or less. This rule keeps your lifestyle inflation in check. Cars lose value fast. Don't let them drag your net worth down with them. Financially successful people don't necessarily drive flashy cars, but they do make smart decisions about how they buy them. And now let's talk about something no one wants to think about, but absolutely must. Protecting your family. If the worst happens, the rule of 10 times applies to life insurance. You should carry term life insurance worth about 10 times your annual income. If you make $100,000 a year, that's a $1 million policy. Why? Because if something happens to you, your family needs time. time to grieve, time to figure things out, time to rebuild. That insurance gives them the space to survive financially without collapsing emotionally. You don't need fancy whole life policies. You need simple term life, enough to cover your income and give your family a financial cushion. This is one of the least expensive but highest impact decisions you can make. Do it once, then sleep better every night. So now that we've broken down each rule, let's apply them together. The real power is in the combination. Each of these rules is powerful on its own, but when you combine them, they become a roadmap. Use the rule of 72 to choose better investments and speed up compounding. Use the rule of 2000 to value your time and raise your rates. Use the rule of 25x to plan your retirement number. Use the rule of 3x to avoid becoming house poor. Use the rule of the 20th of April, 2010 to buy a car without bearing your finances. Use the rule of 10 times to protect the people you love most. Financial peace doesn't come from guessing. It comes from frameworks. And these rules, they're your starting point. But let's go one level deeper. Why most people ignore these rules, and why you shouldn't. The reason most people don't follow these is simple. They've never seen them. School never taught it. Parents may not have known. Media doesn't focus on basic wealth math. They focus on hype, crypto, and get-rich-quick drama. But the people who quietly build wealth, they use these rules, and they don't announce it. They just live debt-free, retire early, and pass on real assets to their kids. You can do the same if you decide to learn and apply. It's not always exciting, but it's always effective. And now, let's get real practical. Your action plan to apply these rules today, start by writing down your current hourly rate or annual income, annual spending, desired retirement age, mortgage or rent costs, car expenses, life insurance coverage. Then plug those numbers into the rules. Are you saving enough? Are you overspending on housing or cars? Are you investing in a way that compounds? You don't need to be perfect. You just need to see clearly, because financial fog is the real enemy. Clarity is power. Closing words. This is what real financial literacy looks like. The world won't teach you these rules, but now you know them, and once you do, you can't go back. You'll start seeing waste for what it is. You'll start understanding why others struggle, and you'll feel a kind of confidence most people never experience. The confidence of control. So take the time to plug in your numbers. Share this with someone who needs it, and commit to building a life where your money works harder than you do. Because the sooner you follow the rules of money, the sooner money starts following you. Like and subscribe if you want more content like this. Drop a comment below. Which of these rules do you already use, and which one are you going to implement next?